am Sangeetha, Assistant Professor, Department of Economics. Today I am going to take credit creation. Bank deposits plays an instrumental role in the process of credit creation. Most of the time, these banks deposits are used to make a funds transfers from one account to another. This makes them one of the most common forms of money, as banks can easily create a bank deposits. It has pushed cash to be a relatively smart part of the total money circulating in the economy. So bankers are not merely of money, but in an important sense, they are manufacturers of money. Bankers create money out of thin air. Loans create deposits, or deposits are children of loans. The above statements brings out the credit creation mechanism adopted by banks. The credit creation mechanisms or multiple expansions of deposits are done by the commercial banks in the course of banking activity. Before explaining the credit creation mechanism, we must see there should be a certain conditions prevailing in the economy by which the credit creation activity will be effective. All these economic activities in the country, such as production, distribution, purchase, trade, etc., should take place through the banking system. The banking habit among the people should be popular for all payments. It is the bank money, that is, check should be used as a medium of payment. There should be a less dependence on the cash transactions. Above the conditions, we can see how the bank resorts to creations activity. So first, definitions of credit creation. A credit creation is a process where a banks use a part of its customers' deposits to offer loans to other individuals and business. This results in more money created in an economy. First, we are going to see limitations of credit creations. The first one, deposits with commercial banks, cash reserve ratio, and third one is banking habits of the people and business conditions, opportunities and availability of securities, leakages in the system, central bank policies. The first one, deposit with commercial bank. The banking industry have sufficiently large amount of cash with them, they will be able to undertake credit creation activities. If the arrival of primary deposits is very small, the bank will not be in the position to undertake a credit creation activity. The second limitations of credit creation is cash reserve ratio. As we have seen in our example, the cash reserve ratio is very much limits the expansions of credit creation. Lesser amount of cash reserve ratio allows more expansions of deposits, while higher amount of cash reserve ratio restricts deposits and expansions. The third limitations, banking habits of the people. If the peoples are illiterate or not used to banking habits, then the arrival of primary deposit will be less. People may try to hold more cash with themselves instead of depending into the bank. This will also affect the credit creation mechanism. And the fourth limitation, business condition. During inflation, there will be a more lending and more profits lending to more arrival of deposits in the bank. But during depression, the contrary will take place with less loans, more loss and less arrival of deposits. Apart from this, the confidence of public on banking system will decline, which will result in a run of the bank. The fifth limitations of credit creation, opportunity and availability of securities. Even if the bank has enough resources to lend, the borrowers are approaching the bank must have sound projects. If they come out with a weak project, the bank will not able to require the loan. The securities offered by borrowers must also be acceptable to the bank. If they are not good securities, the bank will not able to give a loan. These securities are prescribed by central bank and which such securities are not available. If affects the banks and lending operations. The sixth point of limitation is leakage in the system. We have presumed in our example in the bank, after keeping the required cash reserve ratio, will be lending the remaining balance amount. That is, out of 1000 primary deposit and rupees 200 is kept in cash in hand and the balance rupees 800 is lent. But suppose the bank is not able to lend the entire balance and lends only rupees 600, there is a leakage in the system. So that extend the arrival of deposits to other banks will be affected. Similarly, the borrower may not spend entire amount as he borrowed due to adverse market conditions. This will also affect the additional creations of deposit with other banks. Seventh point of limitation, a central bank policy. It is the monetary policy of the central bank which determines the credit creation. Cheap money policy, which is a low rate of interest, will expand the credit creation, while a tight money policy, which higher rate of interest, will lead to lesser demand for loans. Credit contractions. When cash reserve ratios is increased, the bankers will have a lesser amount of money that their disposal, and those extent of loan distributed and reduced, and it reduced in the expansions of deposits. It is called credit contractions. A credit contractions can also be explained in the same manner as credit creation or credit expansions. If the cash reserve ratios is raised from 20% to 40%, and the bank will have call back part of loan amount, the only then it will be able to maintain the required cash reserve ratios. A type of credit control, a quantitative control and qualitative control. There are two types of credit controls. One is quantitative and another one is qualitative control. The first one, quantitative controls, aims to increasing or decreasing the quantity of money supply, and the qualitative is it does not affect the quantum of money supply but affects the ultimate uses of money supply, hence it's the discriminatory. The second point of quantitative control, the increasing or decreasing in the quantum of credit influences the economic activity. The quality control, this control does not influence the entire economy but affects only a particular section of an economy. The third point of quantitative control, it is a traditional weapon and is an indirect weapon. The qualitative control, it is a modern weapon and a direct weapon. The quantitative control, the last point, the effect of the controls cannot be felt in the long run, but in the qualitative control, it has a immediate effect. Bank creates a money about the thin air. How it's possible? Every asset the banker acquires, he does not part with the cash but creates deposits in the name of seller of the asset. For example, A sells a building of the bank is rupees 10 lakhs. The bank will show the asset side building worth 10 lakhs, and the liability sides and accounts will be credited as deposit from A rupees 10 lakh, the manner where every assets bring deposits into the bank. Thank you, children.